Alright, welcome back, y'all. Welcome to Outside the Box Finances, where we think differently for a better tomorrow. I'm making this video because in, I think, a few hours, yep, it's basically, there's a possible government shutdown gonna happen. Haven't looked at the news in a while, or in a little bit, so maybe they figure something out. But you can utilize this if there is another impending shutdown for next year. But we're going to go over how to deal with a government shutdown. Alright, so let's move on. So, this is what we got right here. Right, we got income of 5,000, expenses of 5,000, cash flow of 0. So we're going to look at this, right, but I really do just want to go over how much or what we can do to get things done if a government shutdown does happen. So this part I'm gonna show y'all, but let's not really focus too much on the income. So the income does matter, because if you're getting like $10,000 in income and you live paycheck to paycheck and that's cut, that's a pretty significant amount. And depending on where your credit score and so on, and what you can qualify for, coming up with $10,000, it's for a decent amount of us is a feat that most cannot do, right? But if you have that, then you're doing basically, if you're doing good, like you're doing the system, you have everything going on, and things are looking good. Right here, we increased our cash flow to 200, then we increased our cash flow to 500. But then, bam, you get hit with that freaking government shutdown. So what do you do? Right? What is there to do? Well, you can quit and complain and see if it'll go away. Maybe. Who knows? Maybe government shutdown happens and then immediately the next day it's good to go and you still get paid. No harm, no foul. Good to go. Alright, quit and complain. Hey, maybe you do it in front of family members or friends or someone, and they just give you money. Who knows? Or you can just quit and, I don't know, go live under a rock. But that's not what we're going to do, because we're going to take accountability and we're going to figure it out, because that's what we do. We're not just going to roll over and let this, right, take us out. We're going to do what we need to do to make things happen. So what strategies and tools are out there that we can be used? Well, if you got a whole life policy, right, you've been looking at my videos and you've created a whole life policy and you created a system, you're good to go. Also, if you have an imagination, then you can figure out how to get out of this. But also, for the bank, right? The banks do offer are offering assistance, but you do gotta qualify for it. Right? They offer short-term loan at 0%, which is pretty good if you got credit cards. Or you can apply for credit cards and you can open up 5,000 pretty quickly. Also depends on your credit score and so on. We got loans that we can take. I showed in the previous videos how it's pretty easy to qualify for a high interest loan. But the thing is, don't look at the high interest. Look at what you can do with the money and see how you can pay it off pretty quickly, so that way the 20% or 30%, well, damn, 30% is pretty high, but 20%, 25%, 30% really doesn't affect you, because you only have it for probably 60 days or less, right? Then if you're in the Army, you got the Army Emergency Relief, which you can apply for a loan at 0% interest and or get a grant, right? Or because it could possibly be like a hybrid. Then you could get line of credits. I do not use those, right? Don't have too much experience with it because I haven't gotten one. But if you qualify for it, probably pretty good. Friends and family, you could talk to them. And what I mean by calling is, there's like, for instance, if you have a car and you're financing it, you can skip or stop some of the payments. And all they do is, like, if you skip 2 months, then they just add it on the back end, which will increase how much interest rate you get charged. Alright, so what we're going to look at is, let's say, for instance, you don't qualify for the AER, you can't get it, or you just don't want it. You don't qualify for a line of credit, and friends or family, you just don't want to deal with it because you like having the relationship and not put having money be a factor in it. So, what do we do? Let's go down the list. No government shutdown. Good to go. Close up the video. Nothing else to say. Yeah. But there is a government shutdown. Let's not make it that easy and see what we can do. Alright, so we got a whole life policy. If we use the whole life policy, right, we got cash value at $6,700. The reason I put that is because that's how much you need, at least for the life insurance that I have. I could pull up to 75%, which 75% of that is about $5,000. It's about $5,025, but I can withdraw about $5,000, and I'm covered for 1 month because I can use that $5,000 as income. I'm good to go with some cash flow going on there. So what do we got? Gaining interest off the cash value as if it's not borrowed. So we're getting cash even though we borrow it. So when the government shutdown gets closed out and the government gets funded and so on, right? That $5,000 I have, even though I have a loan, I'm still gaining interest off the $6,700 as if I never withdrew that $5,000, which is good. That loan is about 5.75%, but it's off the $5,000, not the full total. So I'm still making I'm still making a net profit. I can pay when I want, meaning that if I pay for the next 3 months, but I decide, hey, that's too much, or I don't want to pay, I don't have to pay. It'll behoove people to pay at least the interest, so that way it doesn't compound. But you do get about 2-3 months where the policy won't collapse, so you're still good. No credit check, I can just pull. Good to go. I've done plenty of these loans, and the quickest I've got it was within a couple hours. So you get this pretty quickly. When the government is funded and reopened, right, then you get the money back. And like I said, you still collect the interest. I mean, if you want, you can pay off the loan, but again, you're still collecting the interest off the $6,700. You can either pay it back, right, or increase the cash value. What I mean is you can pay the loan you have, which is the $5,000. Or you can just pay the premiums up, which pushes your date to the right. So that way you don't have to pay for a certain select amount of time because it's already paid up. And increases the amount. You still gain the same amount of interest percentage, but you gain more on the money you make off that percentage because now you have a higher cash value. Issues. One of the issues is if there's more than 1 month and that's all the cash value you have, and then pretty much you're in a bind there if all you're using is the cash value, and it only works if you have enough in the cash value. Yes, if I only have $3,000, then I would have to figure out how to get the rest of the money. Moving on, what we got is the bank. Of course, the bank's offering, like the bank I have is offering a short-term loan at 0%, and you do got to qualify. And you're covered for about 1 month. There's probably more stuff that goes on, but during that time, they're offering about up to $6,000 for a short-term loan. Something that's good about it is 0% interest. You have to pay back though in approximately 3 months. All right. Oh, sorry about that. Credit approval is required. You must have direct deposits 30 days. This is for the bank I got. Right, of course, when the government is funded and reopened, good to go. You can just pay that thing back very quickly. You got to be eligible for it. You got to meet the requirements. Issues, again, if there's more than 1 month, just like the life insurance, and then you must pay this back or you get into a lot of issues. Next one is credit cards. Right, utilize open credit. You got to see if you have some wiggle room with your credit cards, and if you're not holding a balance or that much of balance, maybe you can use your credit cards in a way where you can fund the $5,000. And also, if you can qualify, you can open a new card. There's a company called Plastique. I don't use it. I'm not sponsored by them or nothing. I'm just saying it because I went on their website and I saw it, and what they do, I think they charge a certain amount of percentage, a small fee. I think it's like 2% or something around there, where you can use them. And what they do is you can use a credit card, it goes to them, and they accept those payments and then go pay like your rent and so on, like things that don't accept credit cards. So that might help out for you. But with open new credit cards, you need to qualify. Like they're just not going to give you $20,000. You got to meet credit approval, which I'll show you down here. Right, you cover for 1 or more months depending on how much open credit you have. Right, if you do it right, you can possibly get 0% interest. If not, you're going to have interest payments. Credit approval is required for any cards that you open up. If you do it this way and you pull a cash advance, you would immediately start getting charged interest. I would highly advise against doing that. I have not used that because that is no bueno unless you're using it very extremely short term. But again, interest charges start getting charged right away when you do that, and it's a little bit higher than just the rate you get if you're just using the credit card itself. Right. You do get cash rewards, which might help a little bit, so it reduces the expenses a little bit. Right. You're dependent on the credit limits though, because again, it depends on when you do open a new card, what you can qualify for, and it does affect your credit because now if you're holding the balance and its government shutdown lasts for a little while, then your credit might go down, and of course you must pay back. If not, your credit will greatly affected. We got loans, of course, borrow. We got high interest loans and low interest loans, and it basically depends on what you qualify for, right? What your credit rating is, and so on. You cover for 1 month and beyond because it depends how much you qualify for. So you got low to high interest rates. Of course, interest payments, credit approval required, and of course those high interest rate ones, you'll likely get approved unless your credit is just totally messed up. But even there's places out there that'll give you a loan, but it'll be probably 30% or higher. There is a processing fee, so for instance, it's 1 to like 5%. So if you get a $10,000 loan and it's at 1%, what is that? $100. All right, if it's at 5%, it's $500. So you won't be getting the full 10,000. You get about 9,500. So you got to think about that and add it into however your budget is. You do got monthly payments, and you must pay it back. Again, these you must pay back. So that's why I like the whole life policy though. All right, and then you can call. What I mean by that, this is what people don't like doing, and they typically get a company or agency or whatever to do this for them. I don't know why people are scared to call up, but this is one thing you can do like immediately to try to get things reduced and so on. So call up the company. You can skip payments. I've done that with my cars that I finance. This was during COVID too. I skipped up to like 2 payments, and all they did was push it to the right. But if you utilize it wisely, right, can help you out. You can also, I did it with my credit cards too. I called them up and I just asked them, hey, I'm trying to reduce my rates, and I think it was like Navy Federal, one of these credit cards they had from the bank. I called up and they just did it. So there's really no rebuttal. Some of them rebutted me, asking me why I need it. Maybe I should talk to a finance person or figure out a budget or, I don't know, draft up a letter for a hardship type of thing and so on. But calling A doesn't hurt. All they can tell you is no. All right, moving on. Possibly cover reduced expenses. So what I mean by possibly covered is that I'm almost certain that if you call, you're not going to, all of a sudden that you're not going to just make the $5,000 or reduce the expenses so low that, right, you don't need money anymore to cover your expenses. You'll probably be able to drop it a little bit, but not cover it all. All you'll probably do is be able to reduce your expenses maybe 10, 20, maybe even 30%. But that is highly unlikely. So you have to talk, like I said, you have to talk and speak with someone, which a lot of people don't like doing, or don't know how to ask, or don't know what to say. You'll possibly get denied, and it's just something you got to do. Rejection, you just got to take it. Not fully covered, what we talked about earlier. All right, time use. It's going to take some of your time to do this. It's not going to talking to them and try to rebuttal them and negotiate and so on. It's going to take time. It's not going to just be snapping your fingers and it's going to happen. Right? If you skip payments, your loans are going to get extended. Interest still getting charged even when the loan is pushed to the right? Or say, for instance, you're able to not have to pay nothing on your credit cards, and the hardship. You could get put into the hardship category, which I don't know. I haven't done that. I think it might affect credit. I don't know. But that's like worst case scenario if you have to do that. So what would I do? Again, what would I do? Bam, here you go. All right. Let's get on with this. So what would I do? All right. First, I would check my credit limits. Then I'll use it to open more whole life policies. Right, if I don't have enough. And again, I think you should have 3 or 4, which might be difficult because if you have nobody to get additional whole life policies on and be the owner, then you're gonna have to figure out another way. Right? I'll be earning rewards because I'm using my credit cards. That's what I want to do. If not already doing it, run expenses through your credit card because that will also count as payments, which opens up some more cash flow, or at least reduces your expenses. All right. So from here, if I just had like one credit card, what I would do is open more credit cards if my credit score can support. It's pretty good, and I said I could get balance transfers at 0% introductory rate. Right. So if I had, let's say I had a credit card with 5,000, what I would do is open that 0% introductory rate credit card. Balance transfer is probably going to be like 1 or 2%. Move it on over. Now I have a credit card with 0, and I could get additional credit cards, and that I have open credit. So right here, let's say I have a $5,000 credit limit on 1, $7,500 credit limit on 2, and a $2,500 credit limit on 3. And when we go through the other slides, we'll see what we can do with that. From here, right, I'll find some whole life policies. Like I said, I'll open up to 3 policies. Right, you want at least $6,700 in each. The reason why is because, well, I'm basing off the insurance company I'm with, life insurance company I'm with, and I can borrow up to 75%, which will be $5,000, and I'll use it to start my cycle, which I'll explain in further slides. Right, doing this will pay up the premiums, so you can't look at the premiums like, oh, I got another monthly payment. No, if you pay up the premiums, then it pushes to the right a considerable amount, depending on what type or depending on the amount of life insurance you do get. Right, then you can utilize. I'm gonna utilize that cash value, and again, I said up to 75%. Right, from here, again, I'm gonna borrow, and one of those whole life policies will become the income and will cover me during the government shutdown, which is good. Then I can utilize, if I needed to, a TSP loan or the 401k. TSP, I can take out a general purpose loan, right, for up to $5,000. And again, because my income or use it in the cycle, I can pull out a personal loan. That I will probably leave at like at the end, because if I do come to that, then that's like the last things I want to utilize. If I can utilize something else, especially with smaller interest loan charges. All right, can you use collateralized loans, which means that I can, like, if I have my car paid off, then I can use that as leverage to get a loan, to get a reduced interest rate on that loan. Or, like I did, I can take the offer from the bank and use that short-term loan at 0%. So basically, what I would do is use all of this all together instead of just one, like I did before. So this is what I would do. So how would it look? All right. So I'll take that government shutdown short-term loan from the bank for that $5,000. All right, and then I'll utilize if I am able to get that 0% introductory rate balance transfer. And then if we're looking at it, right, I'm using this as an example. We got a credit card at 5,000. Let's say that's zero balance. I was able to get that 7,500 credit card. I moved that 5,000, that's why it's at $0, to that credit card 2 that I got with that 0% introductory rate. And there's a 2% balance transfer, so that's why I got 5,100, and then I got that credit card 3 at 2,500 at zero balance. And the reason I put it low like that at 2,500 is because when you start getting more and more credit cards, especially rapidly like this, then I think the algorithms or automatically knows that you're trying to do this. And because I done it before, and then each credit limit was lower than the other, so that's why I did that. Now, if we have some cash value, one cash value policy at 6,700. Right? Only if needed. That's why I said I'm going to use that personal line of credit only if I have to. And like I said, we had that $5,100 balance. So, starting off, we got the cash value 6,700. So what I would do is I would withdraw that. It would become, I would utilize it as my income. And now I would have a $5,000 whole life loan. From here, right, I grab that credit card with the zero balance. I'll take that $5,000 from that credit card, use that credit card to open me another whole life policy. So for me, I have my wifey and my kids. So I have multiple whole life policies opened up. And like I said, if you don't have nobody else except yourself to get some life insurance on, then you might have to figure out something else or utilize a different strategy. I'm using this strategy because I'm able to get multiple life insurances. So this is kind of tailored towards people with families, kids, and something that have vested interest in the people they surround themselves with. All right, but moving on, digressing. Then I'll take what's left on that credit card 2 and use what's on credit card 3, which is 2,400 on credit card 2, and the whole 2,500 credit card 3, and open up another cash value at 4,900. So this is fine, right? Even though it's not 6,700, you'll see what we're gonna do. From here, we got 5,000, right? Because we're taking that GS loan, like I said, and we're going to utilize that, to pay off the whole life loan, which now opens up that cash value again. So now we can utilize that cash value. So now we got 3 cash values that we can use. So let's say the government shutdown lasts even longer. So let's say 2 months, 60 days. I think the previous one, the longest is not the previous one, but one of the previous ones lasted as long as 34 days or something, 35 days. So it lasted about a month and some change. Right, so it looks like we're not going to need all this, and you'll see why. So we still got that 5,000 government shutdown loan from that bank that we utilize. But do we need to grab another one? No. Because what we're going to... Now, the thing is, if you can qualify for it again and they offer it, take it, because it's a 0% interest loan. So you can utilize that within your cycle. But we're not going to take it no more. What we're going to do is we're going to grab that 5,000 that we opened up on the cash value. And then again, we're going to use that for our income. We're going to withdraw it, and it's going to get us a 5,000 whole life loan. From here, we're going to take credit card number 2. Right? Oh, correction. We're going to take that cash value, right, that we bought, or that second whole life policy that we put 5,000 in. We're going to withdraw 3,750 because that's 75%. And we're going to pay off some of that credit card 2 balance. Now once we do that, we're going to take 1,800 and pay the premiums so we can build up that third cash value to 6,700. which when we withdraw, we can withdraw 5,000. And you'll see, we withdraw that 5,000, right? And then we plug that in and we pay off that credit card 3 balance and some of the credit card 2 balance. From here, what do? Right. We cleared 2,750 on the whole life policy number 2, which will reduce the loan we have on a little bit. And then we'll pay up the premium so we can have 6,700. Now we got 3 cash values with 6,700. Then from here, that same policy number 2, we'll take out that 4,000 and we'll pay credit card number 2, which is that 7,500. We'll pay down 4,000 of it. So that's what we'll do in the second. Now, let's say everything's all gravy, good to go. Right? If not, then I'm going to show you the cycle we can do. Right? I'm saying the government shutdown over, but if it's not, this is the cycle we can do to help out. Or even if the government shutdown is over, this is the cycle we can go so we can keep earning interest, rewards, and so on. So before going through all of this, what we got is 3 credit cards. One with a $5,000 balance on it. Another one with a $3,500 balance. And then we got another credit card with a $0 balance. All right, then we got 3 life insurance policies that are already maxed out on utilizing or being able to pull money out, right, or borrow against the cash value, all at 5,000. So what are we going to do? How do we get out of this, or how do we make this work in our favor? So what we're going to do is we're going to take credit card number 2 and credit card number 3. Credit card number 3's 0 balance. Credit card number 2 has about 4,000, right, credit open. And we're going to take that and use it for cash value 1, which we got up there, for a loan of 5,000, and we're going to pay that off. Right? And then from there, we're going to withdraw 5,000, use it to pay credit card number 1, which clears off that balance, brings it out to 0, and then we're going to use it to pay cash value number 2 loan at 4,000. Right? And that is incorrect because, oh no, actually that is correct. Actually, correction, that is incorrect. That's supposed to be 5,000. Almost messed my numbers. Thing messed me up. So that's supposed to be 5,000. So I'm wrong, right? So I'm gonna pay 5,000. It's still good. So I'm gonna pay the 5,000, and then what I'm gonna do is, look how I put a withdraw 5,000, but I'm paying that 5,000. Withdraw that 5,000 from cash value number 2, and then pay credit card number 2, which is at 7,500. It's gonna bring it down to 2,500, yeah. And then I'm gonna use it, pay off cash value number 3, right? And then what do you think I'm gonna do? Oh, withdraw it, use it to pay credit card number 1, and then use it to pay cash value number 1, and I'm gonna take that and pay off credit card number 2. And what do you think I'm gonna do? Just keep doing it. And it's just a cycle. See the cycle? Then from here, I'm gaining rewards every time I use it. That's about what, $190, right? That we can utilize for our cash flow, or basically just giving us a discount on things, which is extremely awesome. And I'm basing this off of 1% rewards point credit card. If you could get 2%, even better. That'd be $380. That 2% would be extremely great. From here, right now, this credit cards are at 0 interest. What I mean by 0 interest is that since you're paying off the previous balance, you're good to go. So again, off my credit card, as long as I pay off the previous balance from the previous statement, I'm good to go even though I hold a balance. So I'm just assuming or basing it that this is the same. Moving on from here, we got simple interest for these loan policies we hold. So you'll probably hold it for a little bit. It'll charge a little bit of interest, but you doing the cycle you won't be holding that long, and you'll be good to go. And again, if you do hold on to any of these loans, you want to ensure you at least pay off interest so it does not compound. And while all this is happening, you're also gaining it's simple interest for the interest you gain off the 6,700, but then it's compounded yearly. So while that's compounding, as long as you're paying the loan interest rate off, that's not compounding. So the gain is compounding. The money that needs to be paid isn't compounding. So keep it that way. So we got a 5,000 government shutdown loan that we're utilizing. If needed to, we can utilize a TSP, right, general purpose loan, or put in a hardship request, but TSP general purpose loan for that 5,000 if we needed that income. That's if we had money in there. And if push comes to shove and it's needed, a personal loan, even at 20% at 15,000, which there are strategies and stuff so to ensure that you're not getting stuck with that 20%. Hopefully this helps you, and with the government shutdown, if it does affect you, it'll be better, and hopefully that you don't get affected by this government shutdown, or your budget is good, or you guys are doing well and don't have to go through the pain if it does affect you. So again, hopefully this helped. Thank y'all for joining me. Until next time, y'all have a good one.